All right, what up YouTube? Welcome back to my Bybit digital course, video number 10. Topic of the day, Elliot Wave and market structure. So let's do a deep dive into Elliot Wave and how I actually use the Elliot Wave to make price predictions and try to figure out where price is actually headed. So this is just one video in my Bybit digital course. I wanted to build a digital course that teaches you guys everything you need to know about trading. That way you guys don't have to buy any other guru's course. Trading is not super complicated. You need a solid baseline and like a core fundamentals of understanding how the market actually works and how price predictions work and how charting out cryptocurrencies work. After that, you guys can evolve and grow and develop your own crypto trading strategy. So this digital course is going to teach you guys everything you need to know and everything that I actually know about trading crypto and how I was able to turn $1,000 into $30,000 in about 40 days. I could go on and on and on. I don't want to talk myself up. I just want to show you guys, and I want to put this course out 100% for free. That way you guys don't have to pay for anybody else's digital course. I think they're all a scam. I think most indicators are a scam. But all I ask that you guys do is just hit that like button, hit that subscribe button. That's all I ask. I appreciate you guys big time. Let's dive in. Let's get it. Guess what? I'm not a financial advisor. I may have a plethora of crypto knowledge, but this video is for educational and entertainment purposes only. You always need to do your own research. I do not advise that you buy, sell, hodl, trade, or invest in any cryptocurrency. And if you could do me a huge favor and hit that like button, turn on those post notifications, and smash that subscribe button, I would be greatly appreciative. And down in the description, you can always find chapter timelines in case you want to skip ahead, affiliate links, and links to my digital course. Now that we got the YouTube police off our back, let's dive in, let's get it. If you guys are new to Bybit or you guys use my Bybit affiliate link, make sure you guys come over here and do the drop down, go to your rewards hub, and make sure that you guys are checking for all the rewards. Like they just posted a $50 first time deposit, $20 first time deposit, $5 for being an active trader for 7 days, $20 for first time Bitcoin deposit, $5 for USDT trading pairs. Follow them on Twitter, new USDT pair. They're always putting up free rewards. So you guys get $20 for signing up. You guys get 10% off your trading fees for the first 30 days on top of all these other rewards that they're always posting over here on the rewards hub. Over here on Bybit, if you guys have not seen my other videos, I teach you guys all about using the charts and everything over here on Bybit. What's really nice is you can just click the charts by TradingView. You click that and it automatically opens up the Bybit charts over here on TradingView. But to help you guys get a better understanding of how to actually chart Elliot Wave and market structure, it's easier if I just do this over here on TradingView. Let's find what coin can we do. Okay, Shiba was just pumping. I want to do a coin that just started to take off and has really been pumping, so that way you guys can see how we actually use Elliot Wave and market structure to actually make price predictions. So Shiba was going absolutely parabolic. What Elliot Wave is it's just market structure. It's just a pattern. That's all we're really looking for is this 1, 2, 3, 4, and 5 market structure. That is Elliot Wave. You have Elliot Wave 1, 2, 3, 4, 5 ups. And then you'll also have what are considered to be A, B, C corrective patterns. And it goes super in depth. But just to help you guys get a better understanding how I actually use Elliot Wave and how it's been very successful for me as a trader is just looking for these patterns to play out. Like once I have the 1, 2, and I have that retrace, I'm looking for that 5th to be completed. All I'm kind of doing is looking at charts, looking for setups, looking for market structure like this, and looking for key areas on retraces where I can enter trades at. Bullish and bearish divergence to get a better understanding of when I need to enter that trade. When is that retrace complete? When we're talking about market structure in Elliot Wave, when a coin completes a first leg up or a leg 1 is complete, leg 1 is calling for a retrace all the way down to the 0.618. That is the best technical market structure. So when a coin goes up and you pull out your fib and you retrace down, you're looking for a retrace to levels to the 0.618. That is technically proper market structure. But when the market is super bullish, you'll see that coins end up only retracing down to the 0.382 or the 0.5. So the 0.5 is that sweet spot, but when the market's super bullish, it's the 0.382. When the coin completes a 1, 2, 3, 4, 5 micro leg set, which I'll explain later in the video, when that retrace starts, after a complete micro 1, 2, 3, 4, 5 leg set is complete on a 1 hour time frame, I then jump onto like a 1 day time frame and I look at the bigger picture, and you'll actually see that 1, 2, 3, 4, 5 on a 1 hour turns into a 1. And once you have that complete set, then I start looking for the macro leg set and I start looking for that macro retrace. And I'm gonna explain that. So let's just dive into it. And I also have a great video that it teaches you how to set up the Fibonacci retracement tools. So when I have a leg 1 pump up like that and I hit a peak, and obviously we look at RSI levels and we see that RSI is telling us that price is gonna be pushing back to the downside, I'm looking to see how far a coin can go down. When I pull out my Fibonacci extension tool, I'm looking for 3 retrace targets between the 0.382 and the 0.618. The more bullish the market is, the more confident I become that a 0.382 support level is going to hold versus coming all the way down here to the 0.5. And what you'll notice is as you go up, you tend to retrace more and more and more, letting you know that the bullish momentum is leaving the market. And let's do this in replay mode together. So if you go over to Shiba and you start on Shiba at October 4th, you come over here, we turn on replay mode, you go up to the top of your screen, click this backward arrow, and you come over here and you click on October 4th. So we see price coming up. We're gonna press play. We're gonna let our peak get hit. Okay, so now we can see our peak right here. We're gonna pull out our Fibonacci extension tool. We have a peak, or what we think is peak. Now we're gonna try to figure out where is our retrace target. So because of how bullish Shiba was and the Coinbase news, I would have said that these would be my key support levels. I wouldn't have thought that we were gonna come all the way down to the 0.618. So I'm gonna come over here and I'm gonna press play. And we're gonna watch to see where and if price comes down and hits one of our retrace targets. Boom, retrace target hit. So once we got to this 0.0126, I could then start to DCA in. So if I wanted to put $1,000 into Shiba, I probably would have put 500 here and 500 here. If this didn't get hit, the second that price started to break back up above here from a retrace low, say if it gets up above 10%, then I probably would have put the other $500 back in. But how you manage a trade and how you risk versus reward management is a whole nother video. We're gonna have a specific video on risk versus reward coming next. Now that we got our next target, we got our retrace target hit, I can come over here and I can pull out my Fibonacci extension tool. And what I'm going to do is, this is leg one, right? This is our first leg. I'm gonna grab the same Fibonacci extension tool. I'm gonna click on that top peak and I'm gonna pull all the way down to where the bottom is, right down here. So without knowing anything, my best guess of where I thought Shiba was gonna go on the next leg up would be to the 1.618. So we can play this together, and I don't know where it's gonna stop at. That's just me pulling out the fib tool. I'm just kind of trying to see where it might come up to. So I got $500 in. I would have put another 500 back in there. So bam, I got $1,000 back in the game. And I see Shiba, we can see where it's finding support at, right there at that 0.382. I'm gonna delete that other one so you guys can see it a little bit better. And again, I'm just gonna click up here on the top. I'm gonna pull down and we're gonna see if our target got hit. Boom, it got hit, right? Now that our target was hit, I got 100% of my money out of the market. I set a take profit right there at that peak level. And where did price end up hitting at? I don't know if it's done going up, but I would assume it is. So now I'm gonna look for a retrace target, right? I'm gonna come down right to this lowest wick. I'm gonna click and crosshairs right on that low wick. And I'm gonna pull up here. And now again, I'm gonna be looking for that same market structure. This is our third leg up. A lot of the times the third leg retraces a little bit more because of how much the coin has just came up all the way from bottom. It went up from 0.083 up 141%. So a lot of times after a push like that much bullish momentum, I would have thought that quite possibly maybe even the 0.618 would have been hit on that target. But to play it safe, I'm just gonna set these same two DCA targets just like I did here. And we're gonna retrace down in and see if we hit our targets. Bam, there it is, baby. Boom, you see that? Both targets would have been filled. So now I got $1,000 back in the market. Again, my lowest entry point would have been 0.00162. Now I'm gonna be trying to figure out how high is Shiba gonna go on this pump. So we're gonna do the same thing. We're gonna click on the top, right at that top wick. We're gonna put that first ball right there at that top wick. And we're gonna pull down and we're gonna make sure this one aligns right here with this bottom wick as well. So I'm gonna try to delete these other ones and get them out of the way so you guys can see things a little bit better. So right here at the bottom of this wick where this yellow line is, that's where I'm gonna pull the bottom fib level to. Circle ball goes at the peak of this wick and the lower bottom circle ball goes to the lowest wick of this candle right here. We got our 3 retrace targets hit, and our next target up for the 5th leg is going to be calling for a price to 0.0002485. Let's see if we're gonna hit it. Oh, so close. Bam, right there, we got it. Bam, do you guys see that? Look where that wick hit at. This was our line right here. Look where we ended up taking out 100% of our profits. So if we would have bought into Shiba down here at say 0.789, we would have bought in for $1,000. $1,000 would have went up 83%. So on the first push up, we would have taken 83% out of the market. Retrace down, we would have got $1,000, and we remember we would have came up a little bit. So let's just say our average price was at 0.0139, whatever. Runs up again, we take another 46% out of the market right here. So we started with 1,000, then we would have had 1,830. So then we put 1,830 back in. We would have got all 1,800 in between these two targets. So we're gonna set here, we're gonna go right in the middle, and we're gonna pull up, and our target would have got hit right there. It's another 50%, 915. So you start with $1,000 right here. Price runs up 83%. You take out 100%. You cash out your trade, you take out 100%, you wait for the retrace. Price retraces down, you re-entered that trade, not even at bottom. And at this point, you put in 1,830. So you put in your original 1,000 plus 1,830. We run up here to this next point, it goes up another 46%. We take out 100%. That gives us another profit of $840 profit on that trade. We add that, combined total gives us $2,600. So again, we put $2,600 now back in the market right here. We split the difference between 0.0171 and 0.01623. Price runs up and goes up and does another 51%. We start with 1,000, we end up walking with $4,500. And we could have ran that trade and did that trade setup in roughly 2.5 to 3 days. So that's exactly how I use Elliot Wave and market structure. If I pull up a different coin, so if we pull up a different coin like Cadena, you can see over here, see my market structure? See how jagged and goofy that looks? It doesn't have to be perfect. I'm just trying to get a general idea of formation so I can play those formations. Another perfect example right here. When you see these formations starting to get built, my favorite one is to take the trade on the retrace on the 4th, because you already have all the market structure from 1, 2, 3. You see that the coin's playing formation. When you take that trade, the 5th leg gives you the best statistic odds of having a successful trade, but a lot of times the 5th only completes a slightly above the 3rd. So how I like to take it is I like to take them on that retrace. I call it catch the falling knives, and I use RSI and divergence to do so. When I catch that falling knife, I like to ride it up, and instead of trying to be greedy and hold out for the perfect formation all the way to peak, I end up taking profits a little early. That way I get in, get out, I take my profits, and that's the name of the game. It's not about buying in at absolute bottom and riding things all the way up to the top. It's about how consistently can you take money out of the game without taking any big losses. So it's all about risk versus reward. And that's why the next video, I actually had the opportunity. When it comes to trading crypto, it's not about buying in at absolute bottom. It's not about selling at the absolute tops. It's about how consistently can you take money out of the game? How consistently can you go and put money into a market, pull your money out and take profits? And then you allow that profit to compound. If you add 2% to your portfolio a day, every day for 1 year, check this out. This is a daily compounding interest calculator. So if you start with $1,000 and every day you're able to add 2% to your portfolio. So you take 1,000, just like I showed you there, we compound, we keep adding and betting bigger, but at the same time managing our risk versus reward. 2% per day comes out to a total of 1.37 million a year. So in 1 year, if you just added 2% to your portfolio a day, you could turn 1,000 into 1.3 million. Now it's a lot easier said than done, guys. But when you understand how to manage a trade, you understand what risk management is, you understand what key levels are, you don't get greedy and you get used to just taking profits, not holding out, waiting for absolute peaks, but taking profits, getting your money out, trying to find the next best trade, because you're always gonna have a higher probability of finding a coin that's retracing at a bottom and entering it here and riding it up and taking profits, getting out, looking for the next trade, than you are at a trade that's already at peak formation, trying to hold out and suck that last little bit of liquidity out of the game. If that makes sense. So just some basic rules. We're gonna keep this short. We're just gonna talk about a few basic rules. So when we're talking about market structure and formation and patterns playing out, we're gonna talk about some general rules and guidelines to go over really quick. This is our leg 1 right here. We have our 1, 2, 3, 4, and 5. So just some standard rules. Leg number 3 can never be the shortest. It's normally the longest, but it can never be the shortest. So what that tells you is if leg 1 is really long and leg 1 is longer than leg 3, then leg 5 most likely is going to be short. So if leg 3 was right here, I would have assumed, since leg 3 is looking shorter than leg 1, oh, it's not. If let's say leg 3 was way down here and it was super short, I would have been predicting that leg 5 would have been slightly shorter than leg 3. and at least for the first peak right here, and you can see we didn't hit our target at first, but what happened? We came down, we retraced, and we rallied back up and put in that extended fifth. So your extended fifth is when you put in a slightly higher high. Normally you would have been looking to put in a ABC corrective, where we would have seen price kind of come down, come up, and then put in one more lower low. But since we put in that higher high, I consider that to be an extended fifth. And you can dive down the Elliott Wave rabbit hole so deep, it's not even funny. But I just like the general rules. Rule number 1, leg number 3 is normally the longest, but can never be the shortest. Rule number 2, and probably the most important, and people overlook it a lot. Leg 4 can never retrace into the peak of leg 1. So if I come and grab my horizontal line tool and I just draw a line right across, I want to make sure that this leg is not retracing into this peak. Now, yes, wicks count, and if it's just a tiny bit, it's not a big deal. But if I came over here and looked at Shiba on this 4th leg and price had retraced all the way down there and it started to build market structure and push back to the upside, that's not necessarily a good trade setup I want. I might still take the trade if I have more confirmation from other external sources, other indicators, RSI, bullish divergence, some type of media news. But if I'm just looking at market structure and looking for the best 5th leg trades to take, I normally want to make sure that leg 4 did not retrace down in the peak of leg 1. And you can see right here, this is really good. Sometimes they get really close and you're kind of questioning it. If it's just the tip of a wick, I don't think it's the end of the world. But if it finds support drastically high above peak 1, that's a great sign. How do you know when a leg is created or done? You're looking for trends. So you got to go back to my trend line video and watch, but we see we have this uptrend right here. Once that uptrend is broken, that starts my next leg. So we have our 1. Our 1 was still good, but then once these candles started finishing below the 1, it broke that trend. That starts our downtrend. Same thing with a downtrend. When did this become the 2? That became the 2 when candles started finishing above the downtrend. And it's all about trends. If we didn't have a trend break at all here, if there was no trend break, if I drew this trend line and we never broke that trend, say it went out all the way out here, I would have then said that this is my leg 1. But what that does is now that turns into your macro. So we have our 1, 2, 3, 4, and 5. Since we've completed a 5th, normally this would imply that Shiba is going to have a macro retrace. So these were just micro retraces in a micro leg set. Now this becomes the macro 1, and I'm going to be looking for macro retraces. I'm looking for Shiba to retrace down to about 4 zeros, 1891 to 4 zeros, 1668, somewhere in that price range. As long as this wasn't just the hype behind a pump, behind getting launched on Coinbase. And then we'll start that same process over again, and you're gonna be looking for Shiba to do the same thing and run that up a micro leg set inside this leg 3. So I'd be looking for that same type of market structure, that 1, 2, 3, 4, 5 in here to complete leg 3. And then after we complete that, I'd be looking for another macro retrace. And that's a wrap on Elliott Wave, guys. So that's how I actually use Elliott Wave. That's how it's worked really well for me. Not really trying to analyze it and get in too precise and be like, is this a perfect? Is that a perfect? You kind of are just looking for that pattern. No different than a bullish pennant or a descending triangle or a bearish rectangle or a bullish a bullish, bearish, Slim Jim, Dunkaroos, toaster strudels type of retrace, right? It doesn't have to be perfect. I don't even know what I'm talking about. I do know what I'm thinking, and that's I wish you guys would hit that like button, hit that subscribe button, guys. I love you guys. If you guys want to learn more about trading crypto and see how I actually trade live, come join us. We go live every Monday through Friday from 9 a.m. to 11 a.m. Eastern Standard Time. And again, this is my free Bybit digital course, so I'm so grateful. And the reason I focus so much on Bybit, guys, because when I made that switch from KuCoin to Bybit, it was like that $1,000 to $30,000 challenge that we did in like 45 days. If I would have been on Bybit that entire time and not on KuCoin, I would have probably turned that 1,000 into about 100,000 instead of 30. And I say that because when I switched over to Bybit, I was able to turn 30 into 60 in a short period of time, doing very, very little work. So love you guys. Thank you guys so much for stopping by the channel. Everybody hits that like button, hits that subscribe button. I can't thank you guys enough, and I can't wait to see you guys in the next video. Peace.